welcome everyone. Good morning. This is a regular Innovation Bay Wednesday morning event series. I'm your host, as ever, Ian Gardner. I'm a co-founder at Innovation Bay. I'm also a VC investment partner with Gelix Ventures. Also, a big call out to the Innovation Bay team. We've got Faden Stow, who's actually on holiday in the north of Tasmania, so I'm not sure if he's tuning in or not. Claire, Sam, CJ, and Alison. And yeah, like Shan left us last week. So if you're listening, Shan, thanks for the memories. It was a great journey, and we're looking forward to seeing what you do next. We're all working hard to support and connect the startup community across Australia. If you have not been here before, and I know there's quite a few of you who are new, so welcome. Innovation Bay is one of the longest running communities for founders and investors across Australia. Our mission is to support founders really on their journey from idea to IPO and beyond. And we're doing this through a range of events, programs, and content. It's designed really to enable people to connect, learn, and grow. If you haven't been in Hopin, this is a new platform. It's kind of a step up on Zoom for events like this. We think it's great. It's designed a little bit like a physical event, so you can choose where to go. Up here is the sort of main stage, so we're going to bring the panel up and we'll have a chat up here. Once the event's finished at 9 o'clock, we're going to open some networking, so you'll get a chance to do some one-on-one networking or join a session where we can continue the discussion from the panel. So it's a pretty good way of just hanging out afterwards and either doing an individual chat or a group chat. So it's pretty good fun. If you haven't done it, please hang around afterwards. It's really great. Huge thank you to our sponsors, AWS, Farmark Venture, IAG, Farmark Ventures, I should say, KPMG's High Growth Ventures, and Macquarie Bank. They are amazing supporters of Innovation Bay, and they do great work to support the whole startup ecosystem. So check them out, give them some love. All right, so the topic today, look, founders and investors, I mean, it's obviously a very popular and important topic. We've got a lot of registrations this morning. Look, if you get it right or wrong, it can significantly impact the trajectory of any early stage startup, in fact, any startup. For better or worse, onboarding an investor and adding them to your cap table, it's a really big commitment. Some people compare the founder-investor relationship to a marriage because they tend to last longer than the average marriage, I think is the stats that are showing. So finding that right founder-investor fit is critical. Best investors provide founders with more than just money. Excuse me, they have specific industry knowledge, networks of potential customers and investors, other investors, access to pools of talent and operational expertise. And you're really sharing they want to share that with the founders to help them succeed. So once you've got that perfect value-add investor, how do you maintain it and build a relationship throughout your startup's journey? So I'm going to stop my screen share and I'm going to invite my panel up. So panel, if you're in the wings, just click your blue button and come and join me while I just do a quick intro to everyone. James, in no particular order, James Cameron is a partner at Airtree Ventures. If you don't know Airtree is focused on growth and scale up stage companies with James' personal inclinations towards enterprise software, SaaS, security, infrastructure, core tech, and fintech. He's kind of the geeky one in the Airtree team. Don't know whether that's unfair or not, James, but you can debate that in a sec.
That's all right. I'll learn that.
He's invested in a cloud guru, Athena, who's with us, and Secure Code Warrior. Prior to Airtree, James was at Excel Partners in Europe, out of London, I think, and co-founded a SaaS investment research software platform. So welcome, James. Let's go Nathan. Nathan Walsh, co-founder and CEO of the home loan startup Athena. You may have seen them all over the side of buses. Great company. Nathan did an event with Innovation Bay, I think last year now, Nathan. So fantastic progress, and look forward to hearing a bit more about it. You're a fintech entrepreneur. You've had over 20 years expertise in financial services, top tier consulting and legal practice. Are you a lawyer? I didn't know that.
Very much ex-lawyer there, yeah.
Right. But at one point.
Starting out.
Yeah, reformed lawyer. All right, well, that's a good way of putting it. So, but welcome, Nathan. Phoebe Gardner, no relation, spelled differently. CEO and co-founder of Beyond Ag. So Beyond Ag is using insects to transform food waste into high quality insect protein for animal feed and rich organic fertilizer. Came out of StartMate, I think, last year. This year.
Yeah, SID 20.
That's right. We caught up in February. Like, God, this year's gone pear-shaped, hasn't it? So I can't remember when things happen like that. But yeah, amazing company, amazing founder. Really enjoyed catching up with you. Unfortunately, you and in fact Nick, who we'll get onto in a sec, have been locked down in Melbourne. So yeah, I hope you're getting over that and getting back to a little bit of normality. But welcome, Phoebe. And Nick Crocker, general partner at Blackbird Ventures. You are a serial founder of various incredible companies, and you sit in the board of some other incredible companies. So you're on Culture Amp, Neura, XY Sense, StartMate itself, Making Things, Eucalyptus, and Applied. So busy man. You've also got 2 little kids, and you're locked down in Melbourne. So apparently the kids were not that well this morning. So you've got a pandemic in the house. So anyway, welcome, Nick. Thanks for joining us.
And one of them might come charging in at any time, so apologies.
That's all right. That will make for much more interesting viewing. So anyway, welcome. It's a great panel, so really excited to get into this. All right, let me click off with the sort of first question. Look, I mean, I kind of used the marriage analogy at the start. You know, like most marriages do not last as long as most founder-investor relationships. I think once you're in, it's really difficult to get out. Is that accurate? I mean, would you describe the relationship as that, or is it more like a parent-child relationship? Nick, why don't I start with you in this one? Like, how do you think of this relationship?
Okay, so it is nothing like parent-child. Let's set that aside. And then the more I thought about it, the more it's actually not like marriage at all. It's like marriage in that if it works really well, it might last a long time, but that's not the only kind of marker of success. So it's actually quite a complex relationship, and I think that's why it generates so much interest, and it is a talking point. So on the one hand, as the investor, you're the true believer. You maybe believe in this person and this founder more than they even believe in themselves. So you've got this huge supporting and believing role. That's sort of first and foremost. And to do an investment, you have to have so much conviction, and to get an investment through the stages of diligence, you just have to believe so deeply in what the founder is doing. So that's kind of the baseline, is that belief role. But then you have an obligation, or I have an obligation to our LPs as an investor, and I have to wear that hat. I'm a director of the company, so I have an obligation to all shareholders. And then the other thing is, over time, in good founder-investor relationships, a friendship develops, like a genuine friendship. And that sits separately from all of those. And so it ends up being quite a complex relationship. And I think the key is the transparency about which hat you're wearing at which point. And then the ability over time to sort of test the relationship and build it up so that it can withstand those more difficult conversations where you have to say, hey, in this situation, I'm wearing this hat, and that might not be exactly what you want. So it is actually quite a complex relationship. I think one of the really key skills of being a good investor is managing each of those.
Yeah, that's fascinating. I might jump to the other investor first before we get the insight from the founder. So James, any reflections on what Nick just said, or anything that you're thinking?
Yeah, I agree with Nick. I hate the marriage analogy. I know it's often made, and I think the point is the length and the difficulty of getting out of the relationship. I think there's probably elements of truth there, but beyond that, it's not unlike a marriage, to be honest. I think, I agree. I think that it is complicated, but I sure as hell don't spend as much time with Nathan as I do with my wife, and vice versa. And I think there's there is elements of reality in this. It's a business relationship at the end of the day sometimes, and in some cases it's a bit more like a service provider relationship. I am here to work for Nathan and the other founders that I work with, and so in some ways it's similar to a relationship with your accountant or your legal advisor, and we don't need to make it more glorified than that. But I think the core difference between those relationships and a founder-investor relationship is as Nick pointed out, is that it has to be founded on belief and conviction. I think if you don't start from that point, everything else sort of falls apart. You don't. If you're your relationship with your lawyer or accountant, it doesn't have to be founded in belief. You don't have to. Your lawyer doesn't have to believe in your business and believe in you as a founder. But as an investor, you absolutely do. And if you don't start from that position of alignment, then it all goes downhill pretty quickly. But I think it's important to have that belief based on conviction and experience. I think that the minute you start to believe purely as sort of a without conviction and without experience in a space, it tends towards cheerleading. And I think the best relationships are the ones that I've been involved in, where you really believe in a full alignment with the founder for good reason, because you genuinely believe there's something huge here. But I think when you start from that position, a lot of good things come out of it. I think the other big difference, though, in terms of a marriage, is that a marriage, I think, it's much more of a one-on-one relationship with the founders. I think what we strive to do as investors is have a much broader sort of a polygamous relationship with people across the team. I think it's an important point that there's a lot that happens between Nathan and me and my team and Michael, his co-founder. But there's also a lot that happens amongst his team, amongst his VP levels, his CMO, Natalie, his CTO, Peter. There's a lot of sort of interactions between the broader team, and it's now very large at Athena, so the sort of the top level of that broader team, and people within our network, within our team, etc. So it sort of extends, the tentacles extend much further down into a company, and I think that's an important part of the relationship. Yeah,
Phoebe, I mean, like, you're relatively new to this. I mean, you came out of StartMate just this year, and Blackbird has come on. So, I mean, any observations on what these guys have said, or like how you're viewing the relationship?
Yeah, absolutely. I think for me, in particular, as a seed stage founder, when I look at this question, I think similarly to Nick and James, I don't see any likeness to a marriage or a child-parent type relationship. But when I thought through the different kinds of relationships I've had previously in my life that have had some kind of similarity, I think where I landed was on some of the really positive and strong coaching relationships I've benefited from, from a young age. When I was really young, maybe that was a science teacher who supported me and took me through sort of science and maths competitions that I was really lucky to have a great relationship with. And then another one that came up for me was that kind of coach-athlete relationship. And there can be some really strong similarities. And what I thought of was a particular coaching relationship I had when I was playing, in a women's A-team soccer team. And every week we'd go through a process where you didn't know if you were being on the pitch to start that match, but you still had a really strong relationship with that coach, and I did, where you had your personal goals and what you were striving for as an individual athlete, but then also your kind of function in a team, and how I draw the link between that kind of relationship of coaching and in investment is that there's a link there that you work together and you can have incredible support to achieve the mission of the company or your goals as an individual athlete. But there's also an accountability, and in soccer, that was the weekly, are you on the pitch to start? And that could be about your individual performance. It could be about the strategy for the team that you're versing. And then in investment, there's similar reasons why when you go through different stages or answering different kinds of questions, walking into a partner pitch, why you might be, on the field or not. But the coaching relationship endures those shifts on an individual level.
Yeah, that's great. I didn't realize you're a football player. Are you still playing?
Not at the moment in Melbourne, but I love a bit of indoor futsal, so I'll be back at it as soon as I can.
Good on you.
Phoebe's being humble because she was also a semi-professional rower.
Oh, is that right? I did not know that. Oh, we should talk about that. I did a bit of rowing in my day. Anyway, we don't want to go down a sport rabbit hole, but yeah, that's awesome. Nathan, any thoughts on this one?
Yeah, look, I think there's a lot of points well made. I think it is useful to call out why that is an analogy that is made, because I actually think that it's actually more useful to consider parts of the way you would think about marriage much more than a short-term transactional relationship like an accountant or some other kind of advisor. And James, you kind of think about the vow, right? You know, for better, for worse, for rich, for poorer, till exit you do part, right? There's this idea that you're making a decision that does have some real longitudinal side to it, that the conversations you're having early on, where it's that excitement of creating something new, is actually really different than on a great day, on a very tough day, how that works. And so I think just thinking about a relationship that can be resilient through a cycle where it's the person, you know, that you want to be able to get advice from when, you know, you've got these big exciting calls to make when things are really powering, but also the person you're going to be sitting around a table with, amongst others, talking about how you face into some big challenges along the way as well. So it actually is, it is a relationship which, you know, calls that you make quite early about who you're bringing in on some of those earlier rounds end up having a really, you know, huge implications for good or for bad over the life of your entrepreneurial journey. Yeah.
Look, I should probably ask a sort of slightly difficult question. Like, there's been a few examples of you know, fairly high-profile investor-founder relationships that have kind of turned sour, and it's mostly from, you know, if I can call it, like, creepy dudes. So Dave McClure from 500 Startups and Justin Koldbeck, I think it was, and I can't remember where he's from, but and there's been a few others in the valley that were called out in this. But, you know, it's basically gaining a reputation for abusing their position of power in that founder and investor dynamic. Fortunately, we've not really heard any public stories here about that, but, you know, I'm sure it in some form must exist. Look, and it's about the dynamic. I mean, the dynamic is a little unequal, especially at the beginning. You know, you've got the investors who have the power, if that's the right word. They've got the money and the prestige, if you like. And the founders are looking for the money and maybe a little bit starry-eyed about the prestige. I mean, Phoebe, I might ask you this one because, yeah, I think it's important to hear the founder's perspective on this. Have you experienced any of this or any reflections on this point?
I don't think I've had any of those kinds of negative experiences with our investors, and I think I was really lucky early on, and it's something that's really powerful about being in a cohort in an accelerator, where you get to share lots of different stories. And there was a really great piece of advice that I received around anyone that you work with. You have to find people and that you want to, that when you think in the morning, you know, what am I going to do today? Who am I going to interact with? Who do I get to build this this vision with? That you're really excited to work with those people, and that there's a net positive energy after working with those kinds of with the people that you have close to you, and that as a founder you also always have a choice about who you bring into that bubble and who you work with to achieve your vision. So I haven't had negative experiences at all with the investors that we have so far, but I think absolutely there's a process that you go through. I think as a founder, speaking to numerous investors, where there are people that you know that you're going to work well with and that you can gel with as you work together, and people that you might work less well together with. And it's about being really honest with, for me, it was about being really honest with myself about who I can see myself working well with, knowing myself and how I work as well. And that was probably the key to making those kinds of decisions.
Yeah. And Nick, I might jump. I mean, look, Blackbird has got a reputation for being good guys. I mean, or good people. And I think they are. So, I mean, is this something that's brought up at the partner meeting? I mean, like I think you've gone public in several blog posts about the Blackbird culture and what you're trying to strive for and achieve. So, when you hear stories like, you know, Dave McClure and Justin Koldbeck, does that make you squirm and just think even more strongly, not me?
Yeah, absolutely. It's a difficult question to answer, because it's like asking, how do you not steal things from the supermarket? Well, yeah. It's like, you just don't do that. So yeah, it's I think we generally have a good culture within the Australian investment community, and I think James said it earlier. We are in a service role to the founders that we serve, and if you're in a role of, if you're in that service role, then there's just no space for any kind of behaviour that, outside of the illegal and shocking behaviour, even just being a dick to someone, like being a bad person. I think that just falls outside of our kind of expectations of what it is to serve the entrepreneurs that we do. So
yeah. I mean, James, you've worked in venture overseas. I don't think Nick has. I think your only venture experience is here. But I mean, any observations on the culture that you saw in London? And I can't remember whether you worked in the US, but I'm sure you spent some time there. But is there something unique about there versus here that makes this behaviour more likely there than here?
Listen, I don't think so. I think Australia is a very small market. So when these things do happen, and I have heard of some of these things happening in the Australian market, but people find out about them very quickly. And I think the benefit the founders have is that being in a small market, you can speak to other founders and you find out exactly if any of this bad behaviour happens. And you should be speaking to your founders about anyone that you're doing business with, because it will come out very, very quickly. That's a good thing about the Australian market. I think the US, I would say that VCs in general have a tendency to fall into a trap of believing their own bullshit. And I think it's probably more likely to happen in the US just because it's been more entrenched there. And I think putting some of the really bad behaviour aside, just the mere fact of people being dicks in their VC role and having an uneven power dynamic, that really stems from believing in your own bullshit. It's like I used to go to at uni, used to go to those uni drinks parties, and the people who would organise it used to hold all the tickets for the drinks tickets. If they thought for a second that people were coming up to them because they were glowing conversationalists and not because they were holding a wad of drink tickets, they're an absolute dickhead. In VC, and I think sort of movement towards VC as thought leaders, which I try and rally against. We're good at some things, we're absolutely terrible at others, and so the minute you start to believe your own bullshit is the minute you sort of start a slippery slope in this business. So I think leading with curiosity and being genuinely interested in everything that you look at and the founders that you meet is the best way to make sure that things don't become transactional, and that you understand that we're here for a reason. We're a very small piece in the puzzle in this innovation economy, and that we can't fall into that trap of believing our own bullshit.
Yeah, no, that's good insight. And Nathan, I mean, you've been, how can I put this, round the traps a little more than some of the founders out there. I mean, have you experienced anything like this? I mean, any observations?
Yeah, so no, I think we've again been very fortunate, like Phoebe, in terms of who we've worked with, but certainly spent a lot of time talking to other entrepreneurs. And I'd really encourage folks to take advantage of the fact that James was talking about. This is a small market. There's a real opportunity to get an understanding of what investors behave like on a good day and a bad day, and the impacts that can have. And I think clearly that can be right at the egregious character problem area, toxic behaviour. But frankly, it can be just as deadly, which is just about capacity, right? So how do people conceive their role? How do they use negotiation? I think the comments made earlier that ultimately success is about collaboration and working really well with a broad set of others. What's the experience like bringing on new investors in a new round? How do you think about sort of ongoing negotiations as you're optimizing structure, et cetera? There's 100 opportunities where someone who's really bringing what's the right thing for the broader enterprise? How do we really make this successful? How do we bring something to the table as opposed to a transactional, how do I, what's in it for me? Why would I cooperate, get things done? And so the stories I've heard are probably often a little bit more of those small ongoing friction points that just slow decision velocity down, actually make things that should be simple more complex. Certainly, I'm not talking from my own experience here, but that's where I would encourage people to do the due diligence, not just for is someone the raging dickhead end of the spectrum, but frankly, is there someone, a repeat investor, who's shown that their ability to go and get things done? And so hugely important investment in terms of due diligence as an entrepreneur.
Yeah. VCs, I think rightly have a reputation for being data driven, and they're all about metrics, whether it's in the relationships or even in their own businesses. Nick, I mean, are there techniques that Blackbird use to make the relationship better? I mean, are there any KPIs that you can put on, I had a great interaction with Phoebe or Culture Amp or whoever it is today. I mean, yeah, what are you using to drive a better outcome here?
Yeah, so on a quarterly basis, each partner and Danny, who's our head of community, we all score out of 10 what we think the quality of the relationship is with that founder. And then every quarter we prioritize relationships that need attention or relationships where we need more focus. So we have sort of a quarterly temperature check on how we think the relationships are going across the portfolio now of more than 60 companies. So that's one metric. Every time we do a follow-on investment, we use Affinity as our CRM, and Affinity shows you quality of relationship across the team. And what we really like to see is that the founder has built a relationship not just with the lead partner, but with multiple members of the team, whether it's an analyst, someone in the community team. So that's something we track every time we do a follow investment. Is has this relationship just been centered on me, for example, or have we been able to have multiple members of the team interact with the founder? So those would be the two data-driven relationship pieces.
And Nick, with Affinity, I mean, that's kind of like a CRM tool that tracks email interactions and whatnot. So, yeah. I mean, how does it know whether the email interaction was positive or not, or is it just one number?
It isn't a sentiment tracker, but volume is a good predictor. So, Mason, who is an analyst on our team, has a good relationship with Phoebe, and so we have a reasonable sense that Mason's not just spamming Phoebe with cat pictures. That there's a positive interaction there happening, but we don't know. It's theoretical that Mason could be driving up his relationship score just by sending the cat pics, but it's volume based only.
And what's wrong with cat pics? Internet based in cat pics.
That's true. That's the third pillar of Blackbird's founder relationships is high volume cat pics.
Yeah, interesting. And James, what does Airtree do to track this, if anything?
Yeah, we use an NPS score just like every other business. I think it's important to be able to track that and track it over time and make sure that you're getting not just the score but genuine feedback from the founders. So we ask the founders themselves. And we have our own views around how the relationship's going, but the founders really are the ones that tell us. I think the more qualitative factors though are important. I think for me, any relationship at the board level, it's important that it's not the worst sort of relationships are ones where it's just a pure one-way reporting relationship. I think that's what we always actively try and rally against. We always try and make sure that the best board meetings we ever have are the ones that are done on a whiteboard, not on a PowerPoint. And that's really just a case of it should be a sort of a strategic discussion around the vision and some of the key challenges in the business, rather than simply here's reporting on our metrics and where we've been. And I think that's the most important thing to keep in mind when you've got a board relationship. I think some of the most important board level decisions don't actually happen in the board meetings either. They happen, on WhatsApp or on late night calls or whatever it needs to be. And I think it's important to make sure that your board relationships have that level of intimacy, so you can have those calls and be close to the founders in that respect.
Yeah. Just a reminder, we've got a pretty big audience on this morning. So if you have any questions, just put them in the chat. I think the stage chat is the place to put them. And we'll get to them in a sec. I'm not going to throw that same question to Phoebe and Nathan. I'd be keen to ask a different question. So, and it's not linked to the second question asked, but it's around choices of fundraising. And I know Phoebe and Nathan are exceptional founders with exceptional businesses. So, I suspect you would have had choices when it came to fundraising. But for many founders, that's not the case, and some of them will end up, they've got limited runway. It's they can see the end point and they're just in a desperate position. So, they end up taking an investor that may not be perfect for them. Maybe I'll start with you, Nathan, because you have been around a little longer. But I mean, have you seen this with other founders? And if so, have you spoken to them? And what sort of advice would you give to founders out there that are desperate for money and might not be picking the optimal investor?
Yeah, that's a tough place to be. And so clearly, to some extent in a chess game, it's how many moves back do you have to be planning so that you can avoid being in that situation. But absolutely, there are people who are in a point where time is not their friend. The key point about creating choice is having options to continue conversations, to get the metrics and story where you need to build a broader set of components. But so absolutely, there are founders at times who don't have that option. But I think the key point here is what are you actually doing to plan ahead for each round, that you're building relationships over time, you're showing trajectory on key metrics and execution ability. So you are creating options for a broader set of investors. Because I do think, in some ways the cash is critical for a business that's really at a crunch, but the long-term cost of actually having to take someone on who isn't going to necessarily be helping you out over the long term in terms of character and capability, that becomes a problem.
Yeah, and also if you're not an experienced investor, you can put in toxic terms into the relationship. So if you end up taking the money and being successful, then it can be a bit of an anchor on subsequent rounds too. Phoebe, any thoughts on this? I mean, again, I'm pretty sure, in fact, I know that you would have had some options on the funding, but have you seen others from StartMate or anyone else that you've been hanging out with? How have you explained or counseled them in this problem?
I think it's a really interesting one and a tough place that I think many founders find themselves in, or at least perceive that they're in that position. And I think it again comes to one of the incredible benefits of building a network of other founders and reaching out to other founders and speaking to them. Certainly, as a first-time founder especially, I lent significantly on the people around me who had raised previously to understand the kinds of terms that were usual and the way to approach investors and to understand what a soft no is as well. And I think that's really important learning that you can accelerate by reaching out and having a group of founders around you who are going through a fundraising process. And then speaking of processes, I think something that I learned from watching other founders was the incredible kinds of processes that you're able to run and measure to go through a fundraising round. And that I think that if you're running those types of processes where you're essentially creating a funnel for investment, that it becomes, if you go through that full process, I think you can reduce the risk of at the end of that being in a position where you feel that you only have one option. I think secondary to that is also the ability to say no and to learn how to say no once you get in that position. And for me, that's something that I think I've done well at some points, and also have learnt later on that I could have done a better job at saying no at the time. Yeah. And I've had to go and remedy some relationships that I hadn't, completely closed off in a way that was able to let everyone move forward really positively. So I think that's another thing where I think founders should keep talking to each other about how they manage that investment process, whether it's ensuring that you have a lot of more options, and also what you do once you get there.
Yeah, well, that's good insights. All right, let's take a couple of questions from the audience. So, James, I might throw this one to you. This is from Stuart Snyder. So, thank you, Stuart. What legal rights do investors have to influence the management of the company, such as replacing the CEO or forcing an exit? I mean, those are two pretty major incidents in the company's life. So, how do you think about that?
I think the short answer is very little. I don't think I've got a single term in any of our shareholders agreement that allow us to do either of those two things. I think we are, at the end of the day, in the passenger seat, and we're minority investors. It's very, very rare for someone who owns 10-15% of a company to ever have those sort of rights. But I think popping up a level outside of the legal rights to do that, the challenges of trying to force an exit through a founder. We're not running the business day to day, so I don't even know how that would work in practice. It's a difficult. I haven't seen it happen. I think the best decisions are always made with the founders driving them. And I think there's counsel and there's a role to play in helping founders come to that decision. And I think once you've made that decision, I think there's help that you can provide in terms of optimizing around that decision. But being able to force through a decision like that is incredibly damaging to the relationship. And I think for the most part, I very rarely see it. I think it probably gets more attention than an actual than you actually see in practice. I certainly haven't seen it in my time at Airtree or my time at Excel. Actually, we've never had to be in that position, fortunately.
But I mean, Nick, I think it's fair to say there are sort of bad investors out there that will try and put terms like this into the shareholders' agreement when doing the deal. So have you seen examples like this or bad outcomes? I mean, I know that Blackbird and Airtree are good investors, so they wouldn't be doing this. But yeah, I mean, it's feasible that these terms could be put into an agreement. Is that right?
Possibly. I'm not aware. I can't think of an example, or I can't think of a company that we've come across where that's in there. I mean, we basically go as the founders go, exactly as James said. So the idea that at the early stage it would even be in our interests to reshape the management team and replace the CEO and all that it just doesn't play out like that.
Yeah, there's definitely, you definitely see some I haven't seen those terms, but you definitely see some terms floating around in seed stage term sheets that feel like they're from like the dark ages of VC. I think that's a particularly Australian thing. I was a bit shocked when I saw some of the terms like, full ratchet, anti-dilution, and some other just strange things that I haven't seen in years and years and years. And I think the best way to deal with that is A, just talk to other founders who've been through a process, and B, look online. Our term sheet's up on our website. It's got a full set of notes to explain everything that's in there and why it's a sort of a vanilla Silicon Valley style term sheet. That there's no excuse for not sort of understanding what a market standard set of terms are these days.
Yeah.
I'd really echo that one, by the way, just the value of keeping things simple and vanilla. So if you're getting early stage investors who are putting really novel, complex things on the table, it's not just a problem because there might be sort of toxic terms like we're just describing, but frankly, just making future rounds way more complex. So I think just investing the time to get the right advice, to spend the time yourself really looking into what standard structures look like. Ultimately, there's a lot of provisions that make sure everyone's acting in the best interest of the company, but it's typically that's backing a founding team to go off and do some great things. So I would just pay attention to terms as in terms of the legal structures as much as the valuation for some of these early rounds to really make sure you're setting yourselves up for success.
Yeah. Look, different question. I mean, and we've been doing this event series now, and this must be event 25 or thereabouts. We've been doing it for a while. Constant recurring theme that comes back is around mental health, and founders in particular. So, Phoebe, I'll throw this one to you. I mean, it's not an easy journey. Mental health is an issue. I mean, you've been locked down in Melbourne for a long time, and I know a lot of people have really struggled with that, especially seeing the rest of the country, out at the gym and riding their bike and doing all that cool stuff, which we won't talk about. But the question's around: is there a responsibility? Like, if you were struggling, would you be leaning on your investor to help them with that, or would you expect that? What role does the investor have in the mental health journey?
I think just speaking really quickly on lockdown, I have a ritual now, which is call a friend in Sydney at least once a week, because the general positive vibes come through, particularly since we went into stage 4 lockdown in Melbourne. It's easy for tone and like energy to drop a bit in Melbourne, and I was always really amazed when I'd call someone up in Sydney who was out in the sunshine seeing friends, just the feeling. And so I've made that a ritual, and I think it's something that's quite helpful to remember there's another side to this, and it'll be summer in Melbourne soon, and hopefully we'll all be out and about again. I think in terms of the mental health journey as a founder, I think, and how that interplays with the investor relationship, I think from a basic level, there are many things founders can do that work for them, that stay on the front foot as much as possible of mental health, systems in place, rituals, like calling a friend in Sydney, daily ways of working, and those kinds of systems and rituals are something that absolutely I might discuss with an investor, and that comes in line with sort of productivity and where we're at and what's happening in the company and how the team is functioning, and all those things play into mental health. And there are lots of things we can do. I think Nick knows that I spend an inordinate amount of time at the local park every day. Obviously, we're limited to an hour a week at the moment, but there are things like that where I go and walk my dog with my partner that are really essential and pivotal moments in the day for me that help support my mental health. And that's something that's sort of shared and understood.
Yeah. Nick, any thoughts on that? Like, again, like part of the data-driven analysis is one of the things in the matrix, you know, founder mental health.
Yeah, and this was when the last Innovation Bay event that I was lucky to be a part of, it was all dedicated to mental health. And I think for a founder, it's a mixture of having another group of founders around you that are going through the same things, because I can't give that same. I was a founder a while ago, right? So I can't give that same level of empathy to what Phoebe's going through every single day as another founder at the same stage. So I think that's really critical, and founders at different levels. So we have some, I don't know if they want me to say the name, but very well-known Australian founders who are very supportive investors at Beyond Ag, who are founders live today. And I know that they've been critical for someone for Phoebe to bounce off. Actually, I've never confirmed this with you, Phoebe. I think Phoebe and I have the same executive coach. So I do think coaching is a really critical part of that. And so for me, it's not that I would be the executive coach, but I was able to provide the introduction and the recommendation to someone that I trusted to get that job done for Phoebe. I think the other thing is my job is to sort of hold up a mirror to Phoebe, and to say, and to have a really clear picture of who she is and who she wants to be. And if I start to see, like if Phoebe told me, oh, I haven't been walking the dog for a month, I would be like, okay, this is off, and I need to ask you, are you okay? And what can we do to help? So it's also just picking up what's Phoebe's sort of normal range, and then what are behaviors that fall outside of that I can observe and then ask the question. But also understanding my limits, that I'm not the counselor, I'm not the coach. It's actually, I need to provide those introductions and provide that encouragement, but I'm not providing the intervention. So I think just making sure and being aware that full range of resources is available to Phoebe, and playing a small role in that, but not obviously. And
I think the reality is that the better the relationship, the easier it'll become for you to pick up the phone, because, admitting that you're struggling or feeling a bit down, it's hard. I mean, it's a position of vulnerability that a lot of people don't like getting into. I may have mentioned this in some of the other broadcasts, but Innovation Bay started this community called Summit Club, which is for late stage founders. We've now got 35 members across the country, and we encourage that vulnerability. So they all get together and they basically help solve each other's problems, because the best people to solve founders' problems really are other founders, because it's a more natural dynamic. But to get to the point of trust and respect is hard. So we found that pretty amazing. And also, I was going to make the point earlier, talking about the fundraising and advice around that. A great place for advice if you're in fundraising, you've got fundraising questions, are other founders. James,
I think it's important to normalize it. I do think we've all got a responsibility around this. I think the stats. I think this is one of the biggest issues in any startup ecosystem. It's founder mental health. The stats are pretty terrifying. The best I've found is that about 49% of founders have self-reported mental health issues, and I know that dearly, because I had the same sort of struggles.
Say that number again, James. Like, what was it?
49%.
49, right? So half of all founders.
Roughly 2 to 3x the general population. This is sort of behavioral psychology. If you've got 10% outside of the behavioral baseline for the general population, that's considered a big swing. To be 2 to 3x is really remarkable. So I think we do have a responsibility as investors and everyone to sort of normalize this. And I think the biggest issue that in founder and investor relationships is it risks becoming another source of pressure. And the best relationships I've ever had as a founder with my investors and vice versa as an investor are where that relationship is a pressure release valve where you can have those conversations and be a place to turn to. But it's tough. It's tough, and you're right, Ian. You've got to sort of create this grounding of trust in the relationship to make that happen. And we've tried in a whole bunch of ways to try and address this. One is we just try and talk about it more. We talk about our own personal struggles. I think that helps. Another is, as Nick pointed out, having a deep bench of people that you can recommend and send in your direction. We've had a bench of sort of clinical psychologists and everyone from nutritionists to sleep coaches all the way through. And we pay for our founders to go and see people on that list. I think the issue that we found when we started doing that list is that if it's putting the offer out there is one thing, but actually making sure that it's done in an anonymous way and that people can avail themselves of those services free of charge, but also without in an anonymous way was important. So I think that has changed the way that we do that a lot, and people are taking that up quite a lot. We don't know who they are, and we don't mind, and that's totally okay.
Yeah. Nick, I might throw this to you. We often hear about the founders learning from the investors, but what about the other way around? I mean, I know how much you love learning. I mean, you got a blog post. In fact, I should give you a call out. Like your weekly newsletter is awesome. I always get something of value from it. So, where should people sign up to that? Because I think this is a value add thing. nickcrocker.substack.com. Yeah, so check that out because it's an exceptional newsletter. But yeah, so you're always learning. What do you learn from your founders?
I mean, that's the best part of this job, actually, is what you learn from the founders. I think so. With Phoebe and Alex, I've actually learned a lot about maggots, and I never would have imagined that I would find them so fascinating and sort of so awesome. I'm not I wouldn't call myself a maggot guy by default, but I'm definitely a maggot guy now. And so there's the technical learning that comes with the specific problem. But I was thinking about reflecting. I think with Phoebe, what I've learned is just how powerful it is to instill values at an organization at the very earliest stages. And so at Beyond Ag, it's accountability to nature, speed with integrity, live passionately, and be formidable. And in every investor update, Phoebe will give an example of where those values, the team lived those values for the last month. And they're in the board packs, and they're in the investor deck, and they're in the monthly updates, and they just resonate out of Beyond Ag in everything that they do. And so I think that's something that I will always sort of take forward, is the power of values at an early stage company. And I could give more examples, but I think in the Phoebe example, that was one where I just was kind of blown away by the power of that.
Yeah. James, you've been in investing now for a while. I mean, so what have you learned from Nathan, and what are some other highlights of you learning from founders?
Yeah, don't say maggots.
Maggots for sure. So I think as a VC, you've got to embrace the fact that you're usually the dumbest person in each room that you walk into. You are dealing every day with people who have spent their entire lives focusing on areas, and the minute you start to believe you're not the dumbest person in the room, it's a downward spiral. And with Nathan, I pride myself on being sort of a product-focused investor. I like great products. With a fintech product is one thing, but there's the fin side as well as the tech side, and working with Nathan and Michael and understanding how you build a consumer-focused financing business with the mammoth amounts of institutional support that you need to on the debt side and the structuring side that you need to bring together has been, a huge new world for me. That's why I've been on a very, very steep learning curve. So every single board meeting, I'm sitting there like a school kid, just lapping up learnings from these guys, and it's fantastic.
Yeah.
It's nice how he did bring it back to maggots in the end there. So that was
all right, look, we've got probably another 5 or 6 minutes, so there's a few more questions. There's one in from Dimitri Titstakis. Probably mangled that. Sorry, Dimitri. And it's kind of linked to one I was going to ask anyway, just around the the highs and lows in a relationship. So, what happens when it the true test of a founder-investor relationship is not when it's going well, because it's easy, but when the shit's hitting the fan. So, Nathan, any examples of highs or probably more lows? I mean, the founder journey is never easy, so I'm sure you've had some tough times. So, tell us about how that's gone well and how it's not gone well with your investors.
Well, it's probably almost interesting just to compare the first half of March to the second half of March this year, where we were, ahead of our Series C numbers by about 30%. We had $1 billion of loan applications in March alone. So things were really moving. And then all of a sudden you've got to a mode where wholesale funding market shut down. We had to, at the same time, moving our core team to remote, shutting down, Manila as a processing center. Series of changes to credit, all the rest. And so sort of being able to sit back with the, James and the rest of the board and really going through, look, here's where we're up to. Here's the sequence of activity. Here's the decisions we need to make. And so, there is that ripsaw of moment of mourning of momentum lost. But then really quickly, how do we get a team excited about facing into a completely new set of challenges? And, frankly, talking about what this could look like at a point where there was some real uncertainty. I mean, so, back to Phoebe and the Melbourne team, I mean, it gets better, right? We're at a point now where we've got real confidence that there is going to be sunshine and we'll be out in parks again and all the rest of it. But that wasn't clear for, a month or two when it was maximum uncertainty. So I think that's that moment when you really are starting to get a bit of a sense of not just here's the story about how do we get, momentum just even faster, but how do you actually deal with that moment of crisis where would have been similar conversations happening in many other parts of the portfolio, but having someone, a team who are willing to invest the mind space and be really part of helping you think through, the head and heart parts of how do you actually deal with some of these, kinds of issues, take your team on the journey at the same time as making the actual business calls. So, that for me was a really, really interesting one in our journey. And it's going to be exciting then, obviously, plan for how we slingshot out the other side of this thing as we get momentum back the other side. Some really great opportunities for us to take advantage of from there.
Yeah. And Phoebe, any thoughts on this one? I mean, it's never an easy journey. So, how have you dealt with the lows with Nick and others?
Yeah, I think there's some that I think about, and one in particular that was more recent. So again, speaking about COVID, we've shifted our teams. We're really fortunate that we're able to continue operating on our site as an essential service, but what that looks like is really different, and operationally it's really different as well. So we now have small teams that go in and complete very specific tasks, and that means that Alex and I as founders aren't there and key people aren't on site. We've just, and in a process where a site's growing and changing really rapidly, one of the things that happened to us is everyone was okay, but we had an accident on our site, and it was our first sort of work accident where someone was injured. We had an ambulance on site, and that because of the COVID setup, that person was alone when this accident happened. So it was, no major injury. They were absolutely fine, but there was a moment of shock. And so that was a really hard phone call for me to get, and then to, call the ambulance and work out the next point. And my next move, as soon as there was a quiet moment, was to call Nick and be like, hey, this has happened. We're in the middle of it. This is ongoing. And to share that and to work through the next processes, because there's a number of levels and things you need to hit immediately when you have those kinds of emergency situations. And then subsequent to that, I think what's been even more meaningful and helpful is that while what we realized through this was that we were absolutely compliant from a safety perspective and doing everything we needed to, there was more we could do to embed safety in our culture and the way we speak every day as a team, and particularly in the COVID context. So I think from that, we've since gone through a like a cultural shift and journey with our whole team to think of all the things we can possibly do to embed safety, language, and thinking next to that value of live passionately, be formidable, so that our desire to get things done never outweighs our need to be safe at every moment and to look out for each other.
Yeah, it's quite different. I mean, I think writing home loan applications is probably not quite as dangerous as moving large industrial machinery around. So, you know, let's take, it's 8:56. So look, we've got, there's one tactical question. So if I can get, I probably won't ask everyone, but just anyone that's got a view in this. So this is from Lily Wang. How do you pick a capable legal firm to represent founders? So maybe James, let's start with you quickly.
Oh God, I like Nathan used to be a lawyer and I was a terrible lawyer, so don't take my recommendations. But I think there are things that work in startup land from the legals that people who have done startup legal work before will know implicitly, and I think throwing a skilled lawyer at a startup question sometimes leads to pretty perverse results. So I'd find someone who has experience in this space. I know Nathan, and I think you guys use Legal Vision. I think they're fantastic. We use them a lot. They know this area very well, so I'll give them a plug. But there's others as well. K&L Gates, Free Hills do a lot of startup legal work as well. So find someone that has done that work before.
Yeah. All right. Anyone else on that one, or should we wrap up if you don't have a strong view? Nathan?
I would just ask someone who's going through their Series B or Series C about what they think about their lawyers from their seed round, because you will have, all of the challenges around what you originally did will be there. I wouldn't pick a firm, I'd pick an individual. So, we use Legal Vision. Jill McKnight and Madeline Hunt are absolutely fantastic. But I would go and speak to some other founders and get a sense of who they have worked with. It's absolutely gold having the right advisor to help you step through these sorts of conversations. Yeah. Anyway, Jill's fantastic. Definitely would be doing well if you went with her and her team.
All right. Well, look, let's keep this on time. So I think we will wrap there. That was awesome. I really enjoyed that. So Nick, Phoebe, James, Nathan, thank you so much. I know, Nick, you've got to go, but hopefully the rest of you can maybe hang around a bit for the networking. So if I can ask the four of you to click leave, I'll just finish off with a quick wrap.
Thanks so much, everyone.
Thanks, everyone.
Thank you.
All right, let me share my screen. I share the right one. You don't want to see what I'm looking at. All right, so look, thank you. Look, in a sec, we are going to switch the networking live. I think Claire's already done it, so thank you. So we've got 2 rooms in the sessions which you can jump into. You can either participate, sit down at the table, or you can just watch and listen. You can lurk, or you can do the one-to-one networking, which I quite like doing. Next week, we have we're going to be talking about growing and building startup communities. So I think we know a little bit about that, but we want to bring some experts. So I think we haven't announced the speakers yet, but there's a couple of fantastic speakers. I think, yeah, Kate Cornick is one from LaunchVic, and we're just waiting for confirmation this morning on the other one. So if you're an entrepreneur, investor, ecosystem builder, policymaker, anyone like that, join us and you can ask the questions. We've also opened a pitch event, Agritech for angels. So we've got a really good group of angel investors who will be looking at these. So if you're an ag tech or you know someone that should apply, then have a look at that. We put out a news special on the podcast this week. So we had Tim Burrow, a really good event. Really enjoyed this one. It's a lot of fun, great conversation. So check this one out. Tim Burrows from Umbrella, Jackie from Airtree, and Steve from Drive Yellow. So check that one out. And there'll be another episode, I think, with Melissa Widner coming out in the next couple of days. So look out for that. Thanks again to our sponsors, AWS, KPMG's High Growth Ventures, AWS, and Farmark Ventures. I am going to click stop slide. We are done for this morning. Thank you everyone for joining. I've been your host, Ian Gardner. Have a great day, and hopefully we'll see you in the networking.